Well, it is budget day here in Australia, with a keen eye being kept on forecasts when it comes to iron ore. That has fallen steadily since peaking in February and then tumbling into a bear market. We're down, I believe, at last check, about 40% lower when it comes to prices. Let's bring in AMP Capital's Shane Oliver, because he points out every dollar per tonne of the iron ore price cuts at least $300 million off annual tax revenue. This is not an easy situation. And, we were talking earlier about potentially, having to extend the issuance of 30-year bonds. If you're an investor and you're looking at the iron ore outlook, the coal outlook, questions over China, would you really want to be holding a 30-year Australian bond?
That's a reasonable question, but I guess there is a bit of a premium compared to other countries. So Aussie bonds tend to trade on a yield gap against the US. It's come in a little bit to 30, 40 basis points, but against many other countries around the world, compared to, say, Japanese bonds, you're getting a yield pick up there of, on the 10-year, 2.6 percentage points or something thereabouts. So there is compensation for that risk. And I guess to the extent, yes, Australia does face those risks, that it may take longer to get the budget deficit under control. But then flip side is Europe, Japan, the US have far worse deficit problems or debt problems than Australia does. So when you weigh up all those risks, I think, yes, there is a case to hold those bonds if they are issued.
We must talk about this prized AAA rating. Clearly, Scott Morrison is getting closer to doing what the RBA, what the IMF have said, Australia should do for ages, which is to invest in infrastructure while borrowing rates are still so low. But take a listen to what one of my earlier guests, Andrew Ticehurst from Nomura, actually said. And he's a bit of a contrarian view, but he's saying, look, investors he talks to doesn't think it's a big deal if it gets downgraded. And in fact, it might actually drive up demand for Australian paper.
They say things to me like their investment mandates allow purchases at the AA level. The number of countries left at the AAA has dwindled slowly. I think there's about 8 or 10 now. So it's almost like AA is the new AAA in any case. Some investors, in fact, joke with me that any loss of the AAA, were it to lead to yields rising a couple of bips, would just provide them with an advantage to buy a bit more at slightly better levels.
So there's that view, and now I want to throw up a chart, 84.28. We've got, about 10 governments around the world that still hold the AAA. Australia is the only one that has been increasing its government debt over the past 3 years, and the others have actually been pulling back. Right. What are your views? Does it matter? Does it matter to the markets? And is it just like ripping off a Band-Aid? We're kind of maybe better off without it.
Again, that's a good question. And as you point out from that chart there, we have been going in a different direction to other AAA-rated countries. We've been seeing our debt go up. Other countries have had their debt under better control. So that's why S&P last year put us on negative watch, I think it was. Moody's making sounds recently, and the risk is certainly there. If the budget doesn't hold that line, the government doesn't hold the line in getting us back to surplus on a reasonable time frame by early next decade, then I think a downgrade would be quite likely. Would it be a disaster for Australia? Probably not. It's symbolic. Last time we got downgraded back in 1986, a long time ago. It took 14, 16 years to get it back again, and we had to go through immense economic reforms to do that. So I think it would be a sign that we've become like many other countries, who we've lost the way, we can't control government spending. But is it going to mean much higher interest rates for Australians when they borrow at the bank? I don't think so. I think, as Andrew Ticehurst pointed out, the impact overall would be quite marginal in terms of the actual increase in the cost of funding to Australians. In fact, as he says, he would just be joining lots of other countries down there. But bear in mind, out of this budget, the ratings agencies will look at it, but they won't downgrade immediately. If they're going to do anything, the other ones might, Fitch and Moody's might put us on watch, but it would take a while, I think, before we actually see a downgrade.